name is Jerry Yu. Thank you for watching my YouTube channel. Please click the like and subscribe button. This will help me tremendously with YouTube algorithm. Today I wanted to talk about the potential for 3 discounts on strategic Roth IRA conversions. Now, this is a topic we are very passionate about, and it's a great time to be having this conversation as a lot of us are meeting with our tax professionals to hopefully reduce future tax obligations. Roth IRA conversions are basically a way to convert tax-deferred retirement account into a tax-free account, which is a Roth. To enjoy tax-free income, tax-free growth, no RMD requirement, and tax-free legacy for kids or grandkids. This is a really great concept to know more about it. In addition to that, it's a great time in the market because there are 3 potential discounts that we're going to talk about today. The tax rate discount, market value discount, and tax base discount. First, let's talk about the tax rate discount. Now, we have a unique situation that we all know that tax rates are increasing in 2026 when the Tax Cut and Job Act sunsets. We are all going to go to bed December 31st, 2025 on New Year's Eve and wake up the next morning on New Year's Day, January 1st, 2026, and majority of us are going to owe more taxes purely because we are going to hit this physical cliff. And this tax law, the Tax Cut and Job Act, it's sunsetting that year. What this basically means is higher tax rate for a majority of the people. It also means a lower standard deduction. Other random tax items are changing. Capital gains, AMT, which is alternative minimum tax, and even the child tax credit is being reduced. Essentially, if you look at what the current tax rate for the next 4 tax years versus what they're going to be in 2026, the 10% bracket, again, remain unchanged. But you can see the federal marginal tax bracket going from 12 to 15, 22 to 25, and so on and so forth. Essentially, by converting over the next 4 tax years, you're getting a discount rate versus if you wait 4 tax years to do some conversions. Additionally, we have something going on right now, which is high inflation. And what is inflation doing to these tax brackets is, in 2023, they're all being bumped up on the dollar basis. So for example, the 24% tax bracket is going up by about $24,000. Essentially allowing you to convert more and still stay in the same low tax bracket. So that's the tax rate discount over the next 4 years. Let's move on to the market value discount. Now, unfortunately, this year has not been the greatest for both the stock and bond returns. And our account balances, unfortunately, have suffered. For example, if we look at the S&P 500, it's down about 24% as the end of 3rd quarter of 2022. Not just the equity market, but the U.S. aggregated bond index was also down about double digit, almost 15% over that same time frame. Now, again, we never like losing money, but we can actually use this pullback in the stock market and bond market as a potential opportunity. Let's say the balance in your IRA was $500,000, okay, at the beginning of the year, and now we lose 20%. Let's just say that it's now at $400,000. What that means is we can basically convert at a lower value and therefore pay lower taxes. In addition, once the stock market eventually rebounds, which historically it does, all those future gain will be tax-free. Versus if we wait until the market does potentially rebound and we're going to be paying taxes on the higher amount. Now, the problem is that we typically don't convert an entire account balance in 1 tax year as you push us into a higher marginal rate. See, I will talk about the 3rd strategy, which will help eliminate or reduce that potential increase. Let's talk about the 3rd discount, which is the tax base discount. Again, I mentioned that the potential downfall or potential obstacle with doing strategic Roth IRA conversions is that we don't typically convert an entire balance in 1 year, bump us up into a higher tax bracket. We convert over a period of time, typically the next 4 tax years, because again, they are discounted. The problem is, what happened is if the market rebounds over those next 4 years, we actually have to be paying taxes on the higher balance each year. However, what we can do is lock in today's tax base using a 5-year point-to-point index. With this strategy, our account value essentially doesn't grow until the end of the 5th year. And that is where we receive all of our return. Normally, that may not be the best strategy, but this worked out perfectly for strategic Roth IRA conversion. Because again, it allowed us to lock in today's tax base, convert over a period of time without having any growth. And once we convert all of our IRA at the end of the 5th year, all this gain will be tax-free. Let's just say, hypothetically, we have a $400,000 account and growing at 10%. So if the market rebounds and we don't use this discount, we convert $100,000 today in 2022, and next year, 2023, our account value is higher. So we have to convert $110,000, then $121,000 in 2024, and lastly, in 2025, it's $133,000. Basically converting a total of $464,000 over the next 4 years. The Roth balance at that point of time is $585,000. You can see if the market rebounds, we will pay more in taxes by converting over a period of time. However, if we use our 5-year index, which doesn't grow until the end of the 5th year, you can see we are converting $100,000 each of the next 4 years with a total amount converted $400,000. See, if you are at a 30% tax bracket, hypothetically, you are saving about $20,000 in taxes using this strategy. After the index return at the end of the 5th year, all those gains will be tax-free. To sum up and wrap things up for today, we talk about these 3 potential discounts for Roth IRA conversions: the tax rate discount, the market value discount, and tax base discount. Again, this is something that we're really passionate about because we're sitting on 31 trillion national debt and growing. And because of all these COVID relief packages and additional spending packages that have been passed over in the last few years, additionally, we have higher interest rate as well, meaning that just the interest on the national debt alone is $965 million per day. This is a huge issue. And the reality is, this issue is likely to affect the people who pay majority of the taxes, those higher income earning families. See, we just saw recently in the UK, they are dealing with their own debt crisis there. They recently announced that they are going to raise taxes on the wealthy. We know that the tax rate as law stands today in 2026. If this debt situation cannot be figured out, the tax rate would potentially go up even more than that. See, a strong opportunity to take all this discount into your favor. Let it provide tax-free benefits for your future. If you like today's content, please make sure to hit the like and subscribe button, and I will see you in future episodes. Thank you for watching.